guys, good evening, good evening, good evening. How are you doing, guys? How are you doing today? Good evening, Yashvardhan, Jai Shri Ram. Good evening, Het. Good evening, Janvi. Good evening, Aditi. Good evening, Raghav. Good evening, Nandini. And good evening, Tejas. I think Tejas, your name is not on the list. Let me add it. Tejas, Tejas. Okay. Perfect, guys. Perfect, perfect. All right, guys. I hope you are enjoying these master classes. And as you know, that we have made this with our whole blood and sweat. And if you have any feedback for us, guys, please do let us know what is the feedback. Would you like to have more sums? Would you like to have less sums? Would you like to have the concepts even much more faster? Or if you are doing good, please let me know that we are doing good also. Right? Good evening, Phoenix. Okay, first of all, I have a problem with all of you guys. Yesterday's session, I asked you that everybody needs to take a screenshot, and after the screenshot, everybody needs to solve the questions and put it as a video comment. Aditi, you don't have to put a video comment here. You have to put a video comment on the yesterday's stream, right? I think only Janvi has replied with the answers, and I think only Phoenix has replied with the answers. Aishwarya got the answers, sir. We did it. No, Aishwarya, you haven't commented the answers on the video. You have to do this, that once you find out the answers, you have to comment it on yesterday's video. So there is two different things. When the live stream is happening, right now, whatever comments you do doesn't get saved on YouTube. So even if you posted the comment there, it wouldn't have been saved while the live is on. Once the live ends, then you post a comment upon that particular live video, then it happens. I'll give you the link as it is. If that is the case, that none of you could find the link, that is fine. But I do know that, see, the most important thing is that nobody just has to be a part of these sessions. Everybody has to be a participant of these sessions. See, I'm a great fan and a great believer that if I am a teacher, I have to be accountable for your marks. And if I want to be accountable for your marks, you have to be accountable to my homeworks. You have to keep coming onto my sessions, and you need to make sure that you are also giving in the same kind of effort that I am giving in to make sure that you are scoring good in FM. Right? So guys, first of all, essentials. Please make sure that you like the stream. There are 12 people watching and only 5 likes. So that's something that YouTube doesn't like, and neither do I. So please make sure that you like the stream, and I hope everybody who's attending the session, your name is up here. And if your name is up here, you want to be a part of our superb game where we find out every day who is the winner of the day, who is the best person of the day, who's the best student of the day. Please make sure that you put a comment so that I can do that. Also, guys, just as a feedback, I want you to put your city, whichever city are you from, please make a comment upon it. Please do a comment of which city are you from. I just wanted to know where maximum students we do have for. Chalo, meantime, you add the city. In that meantime, what we are going to be doing is we are going to be looking into what we did yesterday. So welcome to Masterclass Day 3, and this Masterclass is on FM capital budgeting, right? Okay, Jaisalmer. I was in Jaisalmer about 8 months ago. Jaisalmer, perfect. Janvi from Surat. I do know Janvi where you are from. Nandini from Bangalore. Perfect. Navi Mumbai, Kolkata. Good job, guys. Good job. Good job. All right. Good. So, guys, also let me know, is this whole leaderboard thing that we do, also let me know very, very frankly, okay? Is this whole leaderboard thing that we do you feel it more of a disturbance, or do you feel it is somewhat motivating? Karthik, good evening, Hyderabad. Do let me know this leaderboard thing that we do. Do you feel it is kind of a hindrance in the class, or it is a little bit disturbing, or it is not that it motivates you to do or give answers perfectly? Please do let me know that also. It's quite motivating. Okay. Perfect. Commented in the yesterday's class. Okay, Aishwarya, I'll check. As far as I remember, I think I checked the comments like half an hour ago. As far as I remember, Janvi did it and she got the perfect answers. Even Phoenix did it. I haven't checked your answers, Phoenix, but I think it is very, very close. Scoreboard se maja aata hai. I do know that. All right, guys. All right. let's get into action. All right, guys, let's get into action. So day 3 of our masterclass. And in this day 3 of our masterclass, we are going through the chapter FM capital budgeting. So today also it is going to be a benchmark session for us. Why? Because today we will be done with all the core concepts of this chapter. So talking about money and talking about finance, that how finance basically judges any project is basically any product is judged based on the capital budgeting techniques that we have. Any and every project that we have to judge it in FM from the viewpoint of capital budgeting techniques. But to apply these capital budgeting techniques, we have to first find out 3 things. One is the initial cash outflow, another is the subsequent cash flows, and third is the terminal cash flow. We very nicely have gone through the initial cash outflow and we are perfect with it. After that, we started looking into the subsequent cash flow, and we were also, I think we have almost completed it. We did this chart, is that how do you come to CFAT? So CFAT is the most important figure in looking into these things, right? So for any subsequent year cash flow, all we need is what is that particular year's CFAT. CFAT stands for cash flow after taxes. And how do we reach to that? So we have this whole calculation that from EBT, IDT to EBIT to EBT to PAT, then PAT excluding finance cost, and then cash flow after taxes. We know this, we have learned this yesterday, and we also know that there are not only one way to do it. We can probably reach to CFAT in 3 possible ways. One is this whole traditional route. If the question does give you about sales, the question is talking about the cost of the goods sold, the question is talking about depreciation, interest, taxation percentage, the question is giving you all such kind of details, then fine. If the question is giving me all such kind of details, I will use this whole chart and I will find out the cash flow after taxes. But if the question is trying to confuse me and do not give me all these traditional details that I need, but the question still gives me one or the other way, what is my EBIT? The question still gives me what is my taxation percentage, not taxation amount. The question still gives me my EBIT. The question still gives me my taxation percentage, and the question still gives me my depreciation. So then also I can find out my CFAT. All I need to do is I'll take my EBIT, I will reduce the taxation percentage out of it. And once I do that, what is EBIT less my taxation percentage? What is EBIT less my taxation percentage? EBIT less my taxation percentage is equals to what? PAT excluding finance cost. PAT excluding finance cost. And this is a shortcut that we learned yesterday. And yesterday we went into great detail why depreciation is being reduced and then why depreciation is being added. Then we also kind of understood why interest is being reduced and then interest net of taxes is being added. All these great things we learned yesterday. Possibly other students might not know it, but I surely know that you now kind of understand why this is happening. Okay, and we'll kind of confirm it with other chapters also. When we do cost of capital together, I'll reiterate this in your head. When we do sums of capital budgeting, I'll put this back in your head, so that you kind of really not only know it, but understand it from some point of view as well. All right. So the second way to get to CFAT is somebody gives me EBIT, somebody gives me taxation, and somebody gives me depreciation rate or the depreciation amount. If somebody gives me that, I can go to PAT excluding finance cost, add the depreciation amount, and once I have the depreciation amount, I'll go to cash flow after taxes. And the third way is basically hidden in the second way only. For example, if a question has directly given me, sir, what is the logic behind and how does the shortcut work? Janvi, very good question, and I will let you know that. Very good question, and I'll let you know that. Good question. I like when a student is stressing so much on why this shortcut is working. I certainly have very, very good inclination towards student when they say not only just adopt the shortcut. When, how do you know that you have the stuff to be a ranker? When do you know you have the stuff to be a ranker? I'll tell you, a ranker is a student who will not take the shortcut as it is unless understanding why this shortcut is working. So very good, Janvi, that you have this question. Most of the students are happy. Oh, sir gave a shortcut. Let's just take the shortcut. Who needs to know the logic behind the shortcut, right? But most of it happens that way. But I'm very happy that you want to know why this shortcut is working. And I'll give you mathematical clear explanation of it. Just hold on for a 2 minute, okay? The third way that we have is, for example, if the question is already given you PAT exclusive of finance cost, all you need to do is simple. All you need to do is simple, add the depreciation in it. So if you have PAT, you add the interest net of taxes and then you add the depreciation. And once you do that, you have the CFAT. So there are 3 ways that you do it. Now coming back to Janvi's question. That why does this particular shortcut work? So basically, if you see what is happening, let's take figures to understand this, okay? So let's take figures to understand this, that I have EBIT and let's say the EBIT is 1 lakh rupees. Out of that, I have interest and the interest is, let's say, 20,000 rupees. So if I am going by my traditional route, I will take EBIT, I'll reduce interest from it and I reach to earnings before taxation as 80,000. Once I reach to earnings before taxation, then I understand, oh, I have to reduce taxation. So let's start by reducing taxation. Let's say the taxation is around 30%. So let's reduce 24,000, which is the 30% of 80,000. And this will come down to 56,000. And what is my 56,000? That is profit after tax. Now, unlike depreciation, see, depreciation is a non-cash expense. So what happens with depreciation is that in depreciation, it is a non-cash expense, but it helps you in tax savings. Depreciation is a non-cash expense, but it helps you in tax savings. So what you do is, with depreciation, you reduce the same amount and you add back the same amount. So for example, the depreciation would be 40,000. You'll reduce 40,000 at the top and you'll add back 40,000 at the bottom. Because all depreciation does is, it just helps you to tax save. There is no cash inflow or there is no cash outflow regarding the depreciation. But if you take or think about interest for a moment, so what happens with interest? Interest is not like it's a non-cash expense. Interest is a cash expense. And interest also helps you to do tax saving. So when you look at depreciation and interest, you do feel, okay, some part of it is similar, that they both help us to do tax saving because interest is above the line. Yes, Aishwarya, it gives you a tax shield kind of a thing. But there is certain differences between them as well. And that difference is that one is a non-cash expenditure. So I have to reduce it and add back with the same amount. But the another one is actually a cash expenditure. There is some or the other part of cash which is going out. Okay. Now, yesterday when we studied this theory, we also kind of understood that interest, even though it's an expenditure, we cannot consider this as an expenditure for the project. In a way, what do you have to think? Is, why is interest happening to me? Interest is happening to me because I might have a loan. As simple as that. Interest is happening to me because I might have a loan. Now let's say that the project is about 20 lakhs. In equity, I have 10 lakhs. As preference share capital, I have 5 lakhs. And we are short of 5 lakhs. So when we are short of 5 lakhs, we think, okay, why not? Let's take the guys with the loan. Let's ask some money. Let's borrow some money. So you go ahead, you borrow the money. And how much money you are borrowing? You are borrowing 5 lakh. I know because of accounts, you are trained to think this way, that equity is us. Preference shares is also us. You kind of believe that equity are owners of the company and those are us, inside the house people, right? Preference shares are owners of the company, they are inside the house people. And because of accounts, you have a view That's not same with the loan guys. That the loan guys are outside guys. The loan guys are outside guys. So what is happening is, this is because of accounts that we think. But if we think from FM point of view, this project would not be possible. This project would not be possible unless all the three shook hands with each other. Unless all the three are treated at the same level. So that is the difference between when you come out of accounting and you get into FM. When you realize that, okay, I do understand that equity and preference shareholders are called as the owners of the company, while as the loan people or the people who have borrowed me money or given me money, they are not called as the owners. I do understand that. But if I look into from FM point of view, this project would not be possible if I did not have all the three of them. So whatever return the project is giving me is equals to EBIT. Or rather, I'll tell you, earnings after tax plus interest adjusted for tax. Why? Because earnings after tax is the component which equity will take home. Earnings after tax is the component that preference will take home. And interest adjusted for tax is the component that these guys take home. So under the CFAT, if you look CFAT carefully, what is CFAT? CFAT is nothing but profit after tax, which is the money belonging to equity and preference guys, plus interest, which is excluding of taxation. This is the money belonging to the guys who have given me loan, plus depreciation, which is a non-cash expenditure. So if a project is taking 20 and I'm looking it into a project perspective, then I have to think, okay, what is the actual earning to me? This is the actual earning out of the project to me. And that is the reason, even while finding out the discounting percentage, I take them, all the three. I take KE, that is cost of equity. I take KP, cost of debt, preference share, and I take KD, cost of debt. And that is the reason that I'm including all of them. Alright. So after this, when I reach to PAT, I'll say, okay, PAT is something that the equity guys earned. PAT is something that the preference share guys earned. But these are not only the two people who have put the money in the project. There is a third person who has put the money in the project. I say who? So the person who has given me loan. Okay. So the person who has given me loan, how much do I got benefited out of it? So yes, interest is the amount, but I saved taxation on it. So interest net of taxes needs to be added back into this. And hence I add back interest net of taxation, which is going to be what? 20,000 less that percentage that is equals to 30%, which comes down to 14,000. So this comes down to 56,000 plus 14,000, which is nothing but equals to 70,000. And once I add depreciation in it, so this is equals to profit after tax excluding finance charges. Okay, that is why it is called profit after tax excluding finance charges. Profit after tax excluding finance charges. That if I don't consider financing charges, if I don't consider this interest as a charge, then it is called as profit after tax excluding my financial charges, and I add the depreciation back, which is equals to 40,000. Hence I get to what is the cash flow after taxes from this project. What is the cash flow after taxes from this project that we are doing? I hope, Janvi, you kind of got it. See, focus and emphasis on this name also as well. It is I need to find out profit after tax excluding finance charges. Why? I do know that in accounts all of the three are together, or there is a difference between the three, but in FM the project is not possible until I have the complete 20 lakhs. Sir, CFAT does not include the amount paid as interest. Yes, CFAT does not. CFAT does not include. CFAT doesn't. In a way, you can think of this way, that CFAT does not consider interest as an expense. CFAT does not consider interest as an expense. This is what you have to consider. And once you consider this, then it will be correct. I hope, Janvi, to a certain level, you did get the answer to that. And if at all there is any other confusion, do let me know. If you have any other counter thoughts, do let me know. But this is the most important thing, guys. that we need to calculate the CFAT. At this moment, again, if you have a little bit, even the slightest bit of confusion, you can think it this way, that there are three people. Sir, in the EBDIT shortcut, do we add back the interest net of taxes? Okay. So if we look at EBIT minus taxation percentage, if we look at what happens at EBIT minus taxation percentage, what this is, what is happening is, mathematically, EBIT is 80,000. And if I look at 80,000, what is 80,000? To be sure, if I look at EBIT, sorry, if I'm looking at EBIT, what is EBIT is 1 lakh rupees, right? I can write this 1 lakh rupees as what? I can write this 1 lakh rupees as 80,000 plus 20,000. That is the amount of EBT and I. That is the amount of EBT and I. And if you look into it carefully, EBT is also getting reduced by tax, which is here. And interest is also getting reduced by tax, which is here. So on both of them, you are kind of reducing taxation. And the same percentage of taxation, 30% and 30%. Hence the shortcut works. That if you do it on EBIT, you'll reach at this level. That is the PAT excluding finance charges. Because taxation is to be considered as an expense for the equity and the preference guys. Also, taxation is to be considered as an expense for the debt guys. Hence, if I do 1 lakh less the taxation percentage, I directly reach to this level. Because EBIT is nothing but the contribution earned by the preference and the equity guys, which is equals to 80,000, and the contribution earned by the debt guys, which is equals to 20,000. If it helps, you need to think it this way, that there are three people who started the project. One of them said that, okay, I don't care how the project does. One of them said, I don't care how the project does. I will give you my money only if you give me 6% in return. One of them said this. The another said, okay, we will only give you 6%. Above 6%, whatever comes is mine. And the same, this guy also agreed. Okay, we'll take your money, we'll give you 6%, and above 6% we will keep. And this is nothing but equity, preference, and the guy who gave you the loan. This is your combined capital that you invested. And once you invested this combined capital, the return that you get is the return for the earnings for the equity guy, which is earnings before tax, return for the preference share guy, which is earnings before tax, plus the return for the debt guy, which is the interest. So I hope this is kind of clear to you, that why this shortcut works is on both of them, effectively on both. Even on EBIT, you are reducing taxation, and even on interest, you are reducing taxation. So in a way, if you are reducing taxation as a separate component on both, why not add them up and reduce taxation at straight away from them? And that is why it gives you the same answer, or you kind of reach to the same level. All right. I hope this is good enough with you. I hope everybody of you can understand this logic. And stating that, I have a question for you. So please solve this question. All of you have to find out what is the CFAT upon this question. Okay. Please find out the CFAT of this question. Guys, please make sure that you hit the like button. There are 15 people watching and there's only 13 likes. Jalal, I'm going to ask you to reconsider your answer. And guys, everybody is requested to solve it. You don't have to be a part of the live sessions if you are not going to be a participant in the live session. And guys, nothing great is ever going to be achieved just by watching. You have to take up a pen, take up a paper, start calculating these things and try to find out the answer. It rarely harms to give a wrong answer. It rarely harms to give a wrong answer. But it will mean the world of confidence to you if you give the correct answer, guys. It will give the world of confidence to you if you give the correct answer. Jalal, please reconsider your answer. Everybody else is saying 3,95,000. You are saying 2,65,000. I am asking you, what is the cash flow after taxes? Well, the correct answer is 3,95,000. Good job, everybody who has given the correct answer. Good job, everybody who has given the correct answer. And because Janvi was the first to give the answer, she's got an extra 5. All right. I hope everybody good enough. Okay. So with this, let's go forward. Towards our sum number 2 for the day. So this is the sum number 2 for the day. Everybody needs to find out the CFAT now as per this situation. Guys, I want you to carefully, if not at all, guys, I want you to carefully write this in your book. And every time you find the answer, find it through this only. Every time you are finding the answer, find it through this only. Okay, guys? I want you to be very, very carefully writing this down. And every time you are finding the answer, do find it through this only. Don't just give me an answer without calculating. Heth 430, Nandini 482 500, Jalal 427 500, Aishwarya 445, Janvi with 427 500, Dibya is giving 445 and Karthik with 445. Guys, why did this trouble you? The correct answer is, guys, 427 500. The correct answer is 427 500. Why does this trouble you? Alright, see what is the question offering you? The question is offering you EBT as 3 lakh rupees, right? So what is EBT in the question? I'm just going to put it here so that it should be easy for us to calculate, right? So the question has given you EBT as 3 lakh rupees. So let's write down EBT as 3 lakh rupees. EBT is this amount, guys, okay? So EBT is 3 lakh rupees, correct? Let's go forward. The tax rate is 35%. Okay, if EBT is given to me, the tax rate is 35%. Let me reduce this 35%. So 3 lakhs less 35%. So I am going to be reaching at to EAT, yani ki profit after tax, earnings after tax, which is equals to 1,95,000, which is equals to 1,95,000. Once I reach to 1,95,000, what do I have to do? I have to add back interest if there is at all. So I am looking into this question. Yes, this question has interest. How much interest is there? 50,000 is interest there. So do I have to add interest or I have to add interest adjusted of taxes? I have to add interest adjusted of taxes. So what is interest adjusted of taxes? Interest adjusted of taxes is that 50,000 less, what is the taxation percentage? 35%, right? 50,000 less 35%, which is equals to 32,500, right? So I will say add 32,500 to 1,95,000 and I will reach at PAT excluding finance cost. And for the first couple of times when you're doing this sum, please be vocal. Please say, okay, I have got EBT, I'm reducing taxes. Please say these steps to yourself so that it sinks in your head very nicely. Please say that, okay, when I add in PAT, I'm adding my interest adjusted of taxes, I am getting to PAT excluded of finance cost, and which is equals to what? 2,27,500. All then I have to do is add depreciation. So how much depreciation is provided in the question? 2 lakh depreciation is provided in the question. So I'm going to add 2 lakh, which is going to be reaching to CFAT, and CFAT is going to be 4,27,500. Correct? I hope everybody of you who got it wrong in the first time is now getting it right. Guys, please make sure that you follow this. This is the root of the chapter, guys. This is the root of the chapter. Trust me. If you are able to solve these questions that I have made, and if you can remember this part, that's the most important thing for this particular chapter. Nothing else. I hope Dibya, as you got an incorrect answer, Nandini, as you got an incorrect answer, Het, you got an incorrect answer, and Karthik, you got an incorrect answer. Aishwarya also, you got no, Aishwarya, I think you got a right answer. Right? I hope you got it now. Right? So the answer for this particular question was 4,27,000. The answer for 4,27,500 is this particular question was this. Okay. Let's go ahead towards the next calculation. Sir, I calculated 30% tax rate wrongly. Oh, the tax rate is 35%. See, the other thing is also, be very careful of the details. Be very careful of the details. Don't make silly mistakes. Write down each and everything that I'm giving you. You may write down and find out the answers. Okay. Okay. Let's go forward with this sum. Is it visible to you guys, right? This sum is visible to you guys nicely. I can do it a little bit up as well. Here you had to do it by 0.65. Multiply by 0.65, not 0.70. So we have the first answer from Aishwarya this time. We have the second answer from Raghav. Third from Jalal. 5,32,500. What a coincidence. All of them have given 532,500. Janvi also with 532,500. 532,500. Nandini also 532,500. Where is Dibya? Yesterday's winner? Where are you, Dibya? Karthik 532,500. Good job, Karthik, on giving your first answer. Or I may say first correct answer. So yes, 532,500 is the correct answer, guys. And accordingly, I've given marks to everybody. So this is how the leaderboard is kind of looking at the moment. Janvi leading with 35. Jalal very, very close, 25. Aishwarya very, very close, 25. And the remaining are following, right? Het 532,500. Correct, Het. All right, guys. All right. Let's look into one more question. These are good questions, guys. Is it confusing you even a little bit? I'm trying to do that. If you are getting confused, I'm trying to do that. I'm trying to achieve that for you. All right, guys. Phoenix 532,500. Good. I like this question. Janvi 4,60,000. Janvi close. Can you do a recalculation? I think probably, wait, I think probably you might be even right, Janvi. You might be even right. I'm not sure what's behind the yellow. That's why I'm saying this. Janvi, did you use the shortcut to solve this particular question, or you did it by long cut? Nandini 460. Raghav 452. Raghav, can you mention your calculation? How did you get 452? And Janvi, can you also mention your calculation? How did you get 460? Shortcut, okay. I could feel it that you did it with the shortcut. Yashvardhan 460. Raghav, put in the calculation. How did you get 452, beta? Phoenix दिया नहीं है, but you can still find out. Can you find out tax rate? Jalal, again, give me the calculation of 452. How did you get 452? Dibya, what is your final answer? Dibya, what is your final answer? $452 is the correct answer, guys. 452 is the correct answer. 452 is the correct answer. So let's see who gave 452 the first. I think Raghav was the one who gave 452 as the best, or the first answer. So let me give Raghav 15 for that. As well as I think 452 was given by Jalal, so 10 to Jalal for the same thing. Dibya, I don't know. Dibya, your answer is also 452. Perfect. So let me add Dibya 452. Dibya, your name is not there in the list today, right? I just misspelled your name, but I think we can all understand it as you. Janvi now with 452 after using the tax rate, and thank you Raghav, good explanation. Guys, एक second. हाय बोल दे सबको. बाय. मुझे आपके पास से लिखना. खत्म कब तक फिर? ओके. नमक है. आप कहाँ से आ रहे हो? ऊपर से? फाइन. आप यहीं बैठो. डैडी लाइव कर रहे हैं, ठीक है? मुझे डैडी के साथ. डैडी दीदी मैंने दीदी को स्टिकर दिया. दीदी ने मुझे स्टिकर दी. ओके. डैडी के साथ बैठना है. बैठना है. Okay, but you have to be quiet, okay? You can't say anything, okay? All right. 452 Nandini, you also have got it, right? So, good job, guys. Good job, Raghav, with this particular thing. And if at all nobody got it, let me just explain it to you. So see, the EBIT is 3 lakh rupees at the moment, right? So we got to write EBIT as 3 lakhs. From the EBIT, we know the first thing that is going to be going out is going to be the interest. How much interest do we have? So we have around 50,000 as interest. So this comes down to 2,50,000. And then once we have to 2,50,000, after that we can remove the taxation. Taxation is 40%. Sorry, 40,000. So this comes to 2,10,000. Okay. And then once we have this 2,10,000, we need to reduce it from, we need to add back the interest. So now we can find out the taxation percentage basically. So taxation percentage is going to be 40,000 divided by 2,50,000, right? 40,000 divided by 2,50,000, which is equals to 16%. So you can find out the taxation percentage, which is 16%. And now you have to add back the interest net of taxes. So what is my interest? 50,000 net of taxes. 50,000 minus 16% is going to be 42,000. So I've got to add back this and I will reach at PAT excluding finance cost, which is equals to 2,52,000. And then once I add my depreciation back, which is equals to 2 lakh, this becomes to 4,52,000. I hope everybody got this now, right? I hope you got this now. Bye, Baldo, can we? Bye. Perfect. So everybody got this 452, right? Anybody having a confusion with how 452 came into the picture? This is a good question. That's why I did a star mark upon it. That I really like this question. Coming to next good question. So this is the next good question. Let's go ahead, guys. Let's do this one. Thank you, Phoenix. She's got her looks from her mother. That's what I can say. Janvi, I need you to check your answer again. Janvi, you found out what was your mistake? And why did you not get it in the previous one? You found out? Jalal, don't mention the tax rate for everybody. Karthik and Nandini, are you giving me approximate answers or is this your final answer? And I don't want an approximate answer. If you can give me up to the decimal, that is also fine. I use the tax amount instead of the tax rate percentage as before. Okay, fine. Heth, I want you to look into your answer. Karthik, I want you to look into your answer. Raghav, is this an approximate answer or a correct? Or you might have used 13%, not 13.33%, correct? Yes, Janvi. That is good. I think, yeah, Raghav as well as Karthik might have used 13%. Even Nandini, you could have used around 13%. So, okay, pro tip, guys. Pro tip for your examination. If at all, like here, the taxation percentage, I think is coming around to 13.33%. Correct, guys? If I'm not wrong, the taxation percentage comes down to 13.33%. And this is a recurring number. 13.33333 is a recurring number. So, pro tip, guys, in examinations, if there is something which is coming in decimals, you have to round off it up to the second decimal only. You have to take it up to the second decimal only. You don't have to take it to 3 decimals or 4 decimals unless otherwise specified in the question. If it is specified in the question, take up to 4th decimal, then it is fine. But if you don't, if it is nothing is specified in the question, take up to the second decimal and round it off up to the second decimal point. Also, in examinations, what I want you to do is, if I was solving this particular question in the examination, I would be solving it in this way. Okay, I have the earnings before taxation. The earnings before taxation is 3 lakh rupees. I do have the taxation amount. So the taxation amount is 40,000. And accordingly, if I want to find out the taxation percentage, it is going to be 40,000 divided by 3 lakh, which is going to be equals to 13.33%, right? Recurring. After that, if I reduce the taxation amount, it is going to be around 2,60,000. All I have to do is, this is my EAT, earnings after tax. I do interest adjusted for taxation. Interest adjusted for taxation comes down to how much do I have as an interest in this particular question. I have 50,000 as an interest, right? So I have to do 50,000 less 13.33333. Take the complete 333 calculation, right? All you have to do is 50,000 less 13.333, complete all up to the decimals, right? And you will get around, I think, 50,000 less 13.333 percentage. That gives you to 43,333. 0.33 kind of a thing. Okay, so you add 2,60,000 to this, and you add 2 lakh to this as the depreciation, and you get to, when you get to 5 lakh 3,333.33. I want you in your examinations to write down next to it APPROX. Do not forget to do this. See, recently I'll tell you, I was analyzing AIR1 certified copies. So you know the guy who got AIR1, his certified copies were out, and I was analyzing. One of the most beautiful thing that I liked in his copy was this, that whenever he did a calculation and it was approximate, even for the percentage, he would write down APPROX. Even for the amounts, he will write down APPROX. So what will happen is that, for example, everybody or the checker knows that this is the answer. But if you get a very close amount to this, as Heth could get 30500, because this is possible, because if you would have rounded off at the another point, if you took this only as 13%, these are possible. And if you don't have an approx next to it, the examiner will think, oh, this guy didn't do it properly, and they'll cut your marks for it. But if you put an approximate next to it, the checker then can understand, oh, this is a variation that can be possible, considering that the amounts here are into decimals, and there can be certain amount of amount mismatch just because of the decimals coming into play, and when are you rounding it off. So one of the best things that I liked when AIR1 certified copy I was analyzing is this thing, that whenever he gets percentages as approximates, amounts as approximates, he uses approx as a figure. And this is what I would also like you to do when you are writing the examinations. Use this approximation next to this. Use this word approximate next to this. I hope everybody got their answers. And I think accordingly I have given the score to everybody for this. Probably the one who got it first was Jalal. So now Jalal is at 50. I'm not sure actually, Raghav, did I give you marks for this or not? But I think I have to give you marks for this. I think I forgot to give you marks for this. Okay. Perfect. Yashvardhan Sir, I didn't get the marks. Okay, Yashvardhan, I'll make sure that you do. And others as well. Okay, fine. We have the next question. Let's go forward with the next one. This is our 50333 question, and then we have the last and final question out of this series. Please make sure that you get it right. I want everybody to get this right. Come on, guys. Everybody should get this right. I'll give you a minute. All right, we have Raghav with the first answer. 544 120 approx. I like Raghav that you did write that. Janvi, we have with an answer. Dibya, we have an answer. Dibya, shouldn't you write approx next to it? Nandani, we have an answer. Hit, we have an answer. Jalal, we do have an answer. Alright guys, last 10 seconds for everybody to answer. Last 10 seconds for everybody to answer, and I'm going to say that the answer of Raghav, the answer of Dibya, the answer of Jalal. I do know, Aishwarya, that you did comment it first, but I have to say heartbreakingly that your answer is not the correct answer, boss. The correct answer is 544117, which is close to Raghav's answer, which is close to Dibya's answer, which is close to Jalal's answer. And accordingly, I do have to give Raghav, Jalal, as well as Dibya. Dibya, I think FM is your subject, right? You love FM. You love being good at FM. Okay, guys, so let me solve this question, as most of you couldn't get it right. Let me solve this question for you guys. So this question says EAT. So I do have my EAT as 3 lakhs. And then the tax is 40,000. So I know that I have to add tax to this to get to EBT. If at all I need it, 3,40,000. Okay. And I do know, I do need this. Why do I need this? To find out the taxation percentage. So earnings after tax is 3 lakhs. My taxation is equals to 40,000. And as we all know, the very, very simple formula, and that simple formula is earnings before taxation less taxation is going to get you to earnings after taxation. Now, if my earnings after taxation in the question to given me is 3 lakh rupees, the taxation amount to given to me is 40,000 rupees. I know X minus 40 is 3 lakhs. So it is going to be, Karthik, very good. 3,40,000 is going to be my earnings before taxation. I can find out my taxation percentage. Taxation percentage is going to be 40,000 divided by 3,40,000, and that is going to be 11.76 approx. Okay, my taxation percentage is going to be 11.76% approx. And accordingly, I will make sure that in my EAT, I will add interest adjusted for taxation. What is the amount of interest that I have? 50,000 is the amount of the interest that I have. So all I have to do is 50,000 less 11.76%, which comes down to 44120. How did I get it? 50,000 less 11.76%. Okay, this is equal to 44120. I'll have to add this with 3 lakh and then add with this 2 lakh, as depreciation is 2 lakh as well. And I reach to cash flow after taxes, 544,120. Alright, so around 120, 117 is good. Karthik, it is fine. Tax rate galat nikala tha. Guys, you have to be very careful about it. Everybody who got it wrong now can understand why or what did you do wrong. So tax rate is going to be what? If any question tax percentage is not given to you, but taxation amount is given to you, EBT is given to you, how do you find out tax percentage? Is nothing but tax amount divided by EBT. Okay, the taxation amount divided by EBT is going to give you the taxation percentage. Okay, tax divided by EB, not EBIT. Aishwarya, not tax divided by EBIT percentage. It is tax divided by EBT percentage. Why? Because just remember this chart. Just remember this chart. What is happening? EBIT, first interest is getting reduced. It comes to EBT and the taxation percentage is applied on this EBT. Okay, the taxation percentage is applied on this EBT. I hope, guys, now this is very clear to you, and now you should not have a problem. As I'm continuously saying this to you guys, this by far is the most important part of this chapter. If you are able to get this, then we'll see ahead all these capital weighting techniques called as NPV, PI, IRR, all of these capital weighting techniques is going to be very, very easy, guys. If you can do CF80 nicely. If you can't do CF80 nicely, it is going to be a big problem, right? So as we are able to do CF80 nicely right now, and we should not have any problem with it. So good job, guys. Good job, guys. I know some of you couldn't get it right, but hey, that's what you have to do is now, when I end the session, after that, you have to look into the session again. Each and every question, try and solve it again. Okay? Each and every question, try and solve it again and get the correct answers. And I hope you have now understood it. So guys, 3 golden ways to find out your CF80. We know these 3 golden ways that are there. And after that, now we are now finished with the subsequent year cash flow. So we know how to compute initial year cash flow. We know how to compute subsequent year cash flow. The third and the final is now we have to find out how do we find out terminal year's cash flow. How do we find out terminal year's cash flow? So this is also a very important aspect. How do you calculate the terminal year's cash flow? Now the terminal year is almost like the subsequent years, right? The terminal year is almost like the subsequent years with certain different conditions happening. That in the last year, yes, you are going to be earning profit in year 1, 2, 3, 4. So each profit you will have to convert to from earnings before taxation, earnings after taxation, whatever is given to me. From earnings, I have to go to cash flows after taxes. From earnings, I have to go to cash flow after taxes. From earnings, I have to go to cash flow after taxes. But if 5th is the final year of the project, I have to have a double responsibility. I will have earnings also in this year. The earnings also have to considered or converted into cash flow after taxes, as well as there will be certain special things attached only to the 5th year. As in, I remember yesterday's session or day before yesterday's session when Dibya said that, okay, what if in the 5th year we are also selling this machine? Then it will become a salvage value. So in the 5th year, we do get the earnings as well as we are giving the salvage value. And as soon as you know that if we sell any kind of machine and if it is the only machine in the block, then there has to be tax treatment attached to it. And if there were multiple, then there is no tax treatment attached to it. So whenever we are selling a machine, we need to also take care, ask ourselves, is there any tax treatment also attached to it? If we are selling on a loss, then there is a tax saving. If we are selling on a profit, then there is a tax expense that we have to pay. Tax payable is coming. And the last and final thing that we also have to consider is, because this is the 3rd and the final or the 5th and the final year of any project, at the end of the project, are we able to get any working capital released? Remember, when we start a project, we not only have to invest in the machine, we also have to reserve some money with us as working capital. The machine alone is not going to do anything. You have to buy the machine, then you need money to buy the raw materials, you need money to pay to the laborers, you need money for all the logistics, getting the raw materials, making the raw materials, delivering the raw materials. Your money will be blocked at the debtors if the debtors don't make a cash sale with you. Your money will be blocked with the debtors. So all of these things also come into picture, guys. And working capital, we learnt while initial investment that yes, this does become a part of my initial investment. But now it's the terminal year of the project. And at the terminal of the year of the project is not going to be there at all. Now, if the project is not going to be there at all, why do I have to reserve this money? I might also get some working capital freed up. So in the last year, I will have to convert earnings into cash flow after taxes. I will have to convert salvage value into cash flow after taxes. I'll have to convert these taxations into cash flow after taxes, and also this working capital into cash flow after taxes. And how do I do it? See, if you remember, this was a sum that we took as an example, that hey, we are trying to buy a machine. All of this part was our initial investment part. All of these 4 years were our subsequent years outflows or inflows. And then the 5th in the final year, we have earnings. This earnings needs to be converted into cash flow after taxes. This we know, because we know how to do it for year 1, year 2, year 3, year 4, and it's the same way to do for year 5 as well. But in the 5th year, see what's also happening. Also in the 5th year, the machine can be salvaged or sold with a value of 50,000. So there is something else with the earning that is being attached to it in the terminal year, and hence terminal year's cash flow do get a separate treatment. And to be honest, the treatment is very easy, because as we have studied this very thoroughly in the initial investment, as we have studied this very thoroughly in the subsequent year's cash flow, now we are just going to be, the same logics there will apply here. The same logics there will apply here. So how do we find out the cash flow after taxes for a terminal year? How do we find out the cash flow after taxes for a terminal year? So it's quite same. You start with the total sales, you reduce the cost of goods sold, and you'll reach to earnings before interest, tax and depreciation. Then you reduce depreciation from it and you reach to earnings before interest and taxation. Then you reduce interest and you reach to earnings before taxation. Then you reduce your taxation percentage and you reach to profit after tax. After that, you add the interest adjusted for taxes and you reach to EAT or PAT excluding finance cost. EAT or PAT excluding finance cost. And then usually as a last step, we would just add the depreciation and we will reach to CFAT. But as this is the terminal year, after adding depreciation, we have to look into a few things. That as this is the last and final year, are we selling the machine? If yes, what is the salvage value of the machine needs to be added. Okay. If we sold the machine on a loss, we did some tax savings, we need to add those tax savings. Or if we sold the machine on a profit, there is some tax payable, we need to reduce the tax payable. Please very make sure about these things. One is a less, the another one is an add. One is tax savings. Tax savings happen on loss. Nobody loves loss as FM loves loss. Okay? Nobody loves loss as FM loves loss. So we need to know that. Then after that, if there is any working capital that is getting released, if there is any working capital that I don't need to get blocked, that also will become the inflow for the 5th year. And after performing these extra things, on the terminal year, I will reach to the cash flow after tax for that terminal year, which is the last year. I hope this is very easy and you could understand. And this is only to be done, guys, on the last year. This is only to be done on the terminal year. We don't have to do in the subsequent years. This is only to be done in the terminal year. Alright, this is only to be done in the terminal year. I hope this is very easy and very easily understood by all of you, that the only difference that is happening, guys, is in the last part. Yes, can you use shortcut? Yes, obviously. The shortcuts that we learnt was we can jump from EBIT to PAT excluding finance cost. How do we do that? If we get EBIT, we'll reduce taxation percentage and we can get to that amount. PAT excluding finance cost. We can use that. And once we get to PAT excluding finance cost, we can add depreciation, we can add salvage value, we can add tax savings, less any tax payable because of gains, and add the working capital that is getting released. And we'll reach to the terminal year's cash flow after taxes. Considering this, I have a question for you. Which I want you to find out. Only find out the cash flow of the taxes for the terminal year. I'll give you all 2 minutes to solve this, and I want all of you to be very carefully doing this, and I want, guys, 100% everybody has to give the correct answer. Please make sure that you give the correct answer, guys. I would like if the batch gets 100% accuracy. Also, guys, 15 people watching, everybody needs to comment. Don't be a backbencher even in a live session. Don't be a backbencher even in the live session. Dibya with the first answer of 17 lakhs. Dibya, have you considered everything, beta? Come on, guys. Answers, answers, answers. Jalal with 1890. Raghav with 1950. Everybody is giving different numbers. Nandini 1950. Jalal, please look into your answer. Dibya, please look into your answer. Come on, guys. I need a 100% correct answer from the batch. As a teacher today, I will take something if everybody gets the correct answer. Hey, look into your answer. Come on. Follow the simple mechanism that we need to follow. Alright, guys. Hi, Vinay. Thank you for giving a comment. And I have to say, Vinay, your comment is absolutely right. Guys, the answer is 1950. Guys, the answer is 1950. If anybody, Raghav, or if anybody else, Jalal is also gotten into 1950. Correct. Perfect, Raghav. Thank you so much for giving the perfect answer and the fastest answer. So Raghav, you get a 15 for that. After Raghav, I think Nandini got it right. Good job, Nandini. Aishwarya got it right. Good job, Aishwarya. Heth got it right. Good job, Heth. Dibya then got it right as well. Good job, Dibya. Janvi got it right. Good job, Janvi. Vijay, I'm sorry. You didn't participate from the starting, so we don't have your name here. Please be tomorrow live at 6:30 with us, so we can also have your name on the leaderboard, and you can also win the Student of the Day award. We don't have a Student for the Year, SOTY, Student of the Year, but we do have a Student for the Day prize to be won. Jalal with the correct answer later on as 1950. Good job, guys. Good job, guys. So, guys, this is how the scoreboard is looking at the moment. Very tough fight between Raghav, Jalal, and then for the third spot, it is an equal with the Janvi and Aishwarya, and very tough fight with Nandini, Heth, Dibya, and all of you. Chalo, good job, guys. Guys, come on. I hope this should not be a problem to you now. Please be careful of all these things. Please be careful, as Dibya said that he made a small mistake of not adding the salvage value. So please be very, very careful of adding all of these values properly, okay? Now, I have a variation for you in this particular case. So the same question, but I have a variation for you. Phoenix, think, what is 40,000? Is 40,000 an expense? Do you have to pay 40,000 or will you collect 40,000? Give me answer for that, Phoenix. If if you are having a profit, somebody will come to your home and ask for taxation. So 40,000 is an expense to you. It is an outflow to you. And all of these are inflows to you. All of these are inflows to you. Yes. So 40,000 is taxes, right? You have to pay it to somebody. Just think, 12 lakh is an inflow. So all of this money I am getting. You can also put a plus or minus symbol so that you understand cash inflow is happening. This 7 lakh will be an inflow. Right? So all of this you have to put in as an inflow, and whenever you are paying a taxation, put a minus sign. So then you get your net answer, whether it is an inflow or an outflow. Okay. If you still have confusion, Phoenix, do let me know. I will solve this question for you. Let's see. Okay. Divya with 21 lakh 10,000. I think Divya is trying to say 21 lakh 10,000. Or maybe it's a typo with Divya. I can consider that as a typo. Raghav 1930. Raghav, I'm going to ask you to please check your answer again. Raghav, I'm going to ask you to please check your answer again. As soon as I say that, people delete it, right, Raghav? So, Divya, Jalal, Divya, I do know that you did the correct answer, but you did a typo. So, I can't give you the max marks for it. I'll have to consider Jalal as the first one to give the answer. So, Jalal with 2010, Janvi with 2010, Divya with 2010 later, Aishwarya with 2010, which is the correct answer, guys. 2010 is the correct answer. Nandini with 2010. Nandini, I'm also happy. Almost each and every question you are almost giving the right answer. Heth 2010. Good job, Nandini. You are from Bangalore, Nandini, correct? Heth 2010. And Aishwarya, where are you from? I love Bangalore's filter coffee. I love Bangalore's filter coffee. Aishwarya, you are also from Bangalore. Perfect. Perfect, guys. Perfect. Rana, hello, Rana. How are you? Rana, we do FM. This is FM Masterclass, Rana. I would just like to let you know. This is FM Masterclass, and we are looking into capital budgeting. We do this every day, evening at 6:30. So please join in tomorrow at the proper time. Today you can be a part of our lessons. And the answer, guys, is 20 lakh 10,000. Raghav, are you able to calculate 2010? Does anybody want me to calculate 2010? Please let me know. If not, then this is the correct answer, 20 lakh 10,000. And does anybody have a confusion about today's class? Any question, please let me know. We can do that. Guys, I'm still a little bit disappointed. We are not getting 100% answers. Like everybody who's answering in the comment. First of all, we are not even getting 100% of the people to answer. That is my problem number one. That if 15 people are watching, we need to have 15 comments. And the second answer is, yes, all the 15 and 15 have to give me the correct answer. These are the two problems that I'm having. I believe both these problems have a solution at your end. Please make sure that you give me that solution. Okay, please make sure that you give me that solution. Okay, Raghav, fine. Karthik, you weren't answering on this, Karthik. Please make sure that you answer. It's important you find out the answer. It's important you give the answer, guys. Trust me, guys, it's not like a big, you are sitting in a big classroom, guys. It's not like you are sitting into a big classroom where, yes, Rana, tomorrow also we will be doing capital budgeting only, because till now we have done few part of capital budgeting, and we'll be starting with the another part of capital budgeting as well. We'll be learning into capital budgeting techniques. So guys, it's important, that you be a part of this class. Make sure that you are answering. Otherwise, what is the purpose of being in a live? Right? When you are in a live session, the biggest advantage is that you can communicate to me. And if you are not taking up that advantage, then nothing is good, you know. It's not as good as being just a guy in the class. So if you are one of those 16 people who are watching this stream, please make sure that whenever I'm putting up a question, you do answer to that. Participation is the best way to learn, guys. And it's good, you know, we don't have a classroom of 500, 600 people that where I can't even look at you. Almost now I remember which city are you from, what are you good at, what are you not good at. So you need to take advantage of this. All right. I remember very clearly my teacher telling me this one thing, that, you know, anything multiplied by 0 is always going to be 0. And why did he tell me this? You know, that this is my teacher and this is me as a student. So even if my teacher is giving 1000% effort, but if I'm giving 0 effort, the end result is going to be 0. So I have to start putting in efforts. And the more effort I put, the more effort I multiply with my teacher and the more synergy I get. So this is something that I learned. This is one message that hit me on my heart very hard. The day my sir told me this, that Sabu, you know, everything multiplied by 0 is 0. So even if I make sure that you get exemption, even if I make sure that I teach you the best of the logics, even if I make sure that you get an all India rank, but even if you do this, nothing is going to be achieved. Right? So each and every one, 15 people of you are watching, you have to be regular. After masterclass, we'll take another masterclass, another masterclass, another masterclass. We'll take the chapters that you want, and we'll make sure that all of you have to make sure that you give the required effort. I'll make sure that I give the required effort. All right. So this is good going, guys. Good going, guys. And I am very, very happy to say this, that all the logics needed to solve this particular chapter is being covered. We have done the chapter 100% from knowledge point of view. Now we just have to use capital budgeting techniques. I hope you remember this particular chart. Then in accounting, to know whether a business is good or bad, we need to figure out the net profit. In accounting, to know whether a business is good or bad, we need to calculate the net profit. And we remember that in FM, we can't judge a fish by its ability to climb a tree. We cannot look into projects and say, from profit point of view, this looks good. In FM, we need to use capital budgeting techniques to find out or to answer whether a project is good, whether a project is feasible, whether a project is viable or not. We need to use capital budgeting techniques. To use capital budgeting techniques, there are many capital budgeting techniques, okay? To use capital budgeting techniques, this you can consider is the base. Now we are thorough with the base. And now this chapter is well within our reach. All these capital budgeting techniques that we are going to go through, you will see that in all of these capital budgeting techniques, some way or the other, this base that we developed here is going to be very, very helpful. All right. So let's start by learning what is capital budgeting techniques and why capital budgeting techniques. See, if anybody has the question, why capital budgeting techniques? So I'll again repeat to you, any project needs to be evaluated. That is the whole purpose of capital budgeting, to evaluate projects. How do we evaluate projects? We use various, note my word, we use various capital budgeting techniques. We use various capital budgeting techniques to evaluate a particular project. And once we evaluate that project, then we can say, oh, I like this project, I don't like this project, this product can be selected, this project cannot be selected. But we use various capital budgeting techniques to evaluate the projects. What are these various capital budgeting techniques, sir? So we have, in a way, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, around 11 techniques. We have around 11 techniques in our syllabus. all of these techniques are going to be very, very simply learned by us because we have spent so great time upon the basics of this chapter. All right. And each and every technique comes with a different kind of mindset. Each and every techniques comes with a different types of mindset. But broadly, these techniques can be divided into two parts. Broadly, these techniques can be divided into two parts. One, techniques that I called as the traditional techniques. Two, techniques that are called as the time adjusted techniques. What is the main difference between the traditional techniques and the time adjusted techniques is the traditional techniques does not consider time value of money. The traditional techniques do not consider time value of money. While as these techniques do consider time value of money. So all of these techniques think that there is nothing called as an inflation percentage. Money today is equals to money tomorrow is equals to money yesterday. They don't have any problem with that. They don't associate value of money different at different particular point in times. While as all of the techniques that I will cover in part 2, these techniques do consider time value of money. So all of these techniques understand that hey, there is something called as an inflation. And that is why money yesterday cannot be equal to money today, cannot be equal to money tomorrow. The same amount of money. And I have to use some kind of discounting factor or some kind of compounding factors to make these money equivalent. To make this money equivalent. Have you guys watched Avengers? Have you guys watched Avengers? Have you guys watched Avengers? All the complete series of Avengers, like the up till the last part of Avengers, have you watched it? You know, when they talk a lot about, it's funny that, you know, as after becoming a CA, I watched the movie Avengers, right? After becoming a CA, I watched the movie Avengers because it came out later, right? So while I was going through Avengers movie, you know, there are so many point of references in Avengers movie when they talk about time travel, right? The Doctor Strange does it a lot of times, and all of these two talk about time travel. So even in movies, you know, once I became a chartered accountant, even in movies, when talks came about, you know, time travel, if not Avengers, then I think one of the movies that you must watch, and this is a homework from me, okay? Even if somebody catches you at home and says, hey, why are you watching a movie? Said, Sir ne bola hai. Okay, so one of the movies that you must watch is Interstellar. I don't know if you have watched this movie, but this is the most beautiful movie I've ever watched. So you have to watch Interstellar. So coming back to the point, in any movie, when there is a talk about going into the future, coming back, or, you know, any kind of time travel, you won't believe, the only thing that comes to my mind is present value of money chapter or the time value of money chapter, because it's all talks about multiverse, and it kind of explains you that, hey, you know, at different point in times, different same things have different values. In different point of times, different things have same values but different meanings. So similarly, money yesterday is not equal to money worth today, is not equal to money worth tomorrow. And you have to find out a common medium on which you can place them. And that is nothing but called as a discounting techniques that we use. That we want to say, okay, how about I make them equivalent to each other? How do I make them equivalent to each other? Alright. On that note, let's look into the first technique of capital budgeting. Alright. So every time you ask or you read this phrase capital budgeting technique, you have to think technique means a way of evaluating the project. One of the various ways of evaluating the project, to be more articulate about it. Whenever you read capital budgeting techniques, I want you to right now open your book index, and in the book index, when the chapter capital budgeting technique word is written, you have to write down technique means one of the many ways how you can evaluate a project. So the first way to evaluate a project is called as a payback period. This is a very easily understandable concept. This is a very easily understandable concept. And this concept is a traditional technique. So here the value of money is not changing with time. Here the value of money is not at all changing with time, but it is a payback technique. And by the name itself, you can grasp it. What does a payback mean like? For example, if I tell you that, hey, somebody came to me with an option saying that, hey sir, there is a project. In the project, you can invest 10 lakh rupees. There is a project. In the project that you can invest 10 lakh rupees. Each year, cash flow after taxes for first 5 years. Each year, cash flow after taxes for first 5 years is going to be 5 lakh. Is going to be 5 lakh. And I say, okay, what happens after 5 years? So he says, after 5 years, you will get nothing. From 6th year, you will get nothing. So if I have to calculate, a very simple thing that I would like to calculate is that, okay, I am investing today 10 lakh rupees. And if I ask myself, when will I get this money back? And if I ask myself this, when will I get this money back? This is equal to payback period. When does the project pays me back? When does the project pays me back? So for example, I am investing 10 lakh rupees today. Each year I am going to get 5 lakh rupees. So at the end of year 1, how much do I get? I get back 5 lakh. At the end year 2, how much do I get? I get again 5 lakh. So by the end of year 2, I realize, hey, I invested 10 lakhs. I got 5 lakh at the end of year 1. I got 5 lakh again at the end of year 2. That makes it to a total of 10 lakhs. So in 2 years, I do get back my payments. Now, whatever I get from 3rd year, that is at the end of year 3, I am going to get 5 lakh. End year 4, I am going to get 5 lakh. End year 5, I am going to get 5 lakh. And after that, the project stops. So yes, in total, I do get 25 lakhs. 5 lakh each year for 5 years. But that's not my question. My question is, what is the project's payback period? And what is the project's payback period? The project's payback period is nothing but 2 years. That in 2 years, the project pays back its capital back to you. In 2 years, the project pays back its capital back to you. Think of it this way, that every entrepreneur starts a business with some kind of capital. And the entrepreneur will be feeling very safe if this capital is returned back to them. And if you have attended my masterclass on investment, I took a masterclass some days back about investing. This is the same strategy I practically use in investing as well. I invest my money and I get back my capital back. So this is called as payback period, and it is pretty simple. Nothing much difficult as you have seen here. It's kind of very, very simple, right? So as it's 8 o'clock and we have a time crunch at the moment, I'm going to be stopping the class here. Thank you for being a part of the class. Guys, if you enjoyed today's class, please make sure that you put the fire emoji right now. And guys, please make sure, I do have a request, and this is really very, very important, guys, that at the end, when I end this video, you do have to comment. Please do a feedback of how was your class. Did you learn something valuable? Did you like? What was the best point in the class that you liked? Just something about the video or something about the classes. It really helps us to grow. Also, guys, please inform your friends about these classes. Aishwarya, Nandini, there is a lot of request from the Bangalore students. There is a lot of requests from all the students from the South India where they asked that, sir, can we have a complete English classes? And I said, okay, let me do that for you. But please make sure that you do inform your friends about these classes. and you do help me reach them as well. And the more they will be a part of these lectures, the funner these lectures will be. Right? And coming to today's student of the day. Coming to today's student of a day, by a very thin margin, it is Jalal. Jalal, good going, boss. Good going, boss. 85 is your score. Good going, boss. Everybody, please make sure that you put a clap for Jalal. Jalal, sir, English, please, Chennai. Jalal, I was talking in English only, right? Did I ever say any other word in Hindi? Please make sure, guys, that you do let your friends know. Jalal, please make sure that you do let your friends know as well, okay, about these classes. And that's about it, guys. Thank you so much for being a part of it. Tomorrow is Friday. Tomorrow is the last weekly class, and probably, as I am kind of imagining, around Tuesday, this chapter will be over. I don't take classes on the weekend, guys. So Saturdays and Sundays I take as an off. So next Tuesday, I believe, we will have a class tomorrow though, guys. We'll have a class on Friday. We'll have a class on Monday. And I believe by Tuesday, we will be done with this chapter. And then we can take on another chapter. Any suggestions, guys? What do you want as the next chapter to be? Any suggestions? What do you want as the next chapter to be? I'll only consider important chapters for your syllabus. No other chapter. Any suggestions on what chapter do you want, guys? Rana, ratios. Working capital management. Good suggestions. Working capital. I think most of you don't like working capital as much. Maybe we can take working capital. Let me ask my team if they have started work on any other chapters. I didn't knew ratios was that big a problem, guys. To be very honest, two of you asking for ratios, I thought ratios is probably the easiest chapter from your syllabus. But as I think I'm getting a lot of requests for ratios is not that bad as well. We can take ratios. Janvi, working capital management. Hate, working capital management. Okay. I've got your answers, guys. Yashvardhan, working capital management. I do know. I've got your answers, guys. So let us work Raghav, working capital management. Working capital, to be very honest, even in my hearts, I had either cost of capital or working capital management. So let me see if the team has already started working on cost of capital or not. And if not, then I'll ask them to start working upon working capital management. But in turn of events, I have to discuss this with you, that I will not be taking any classes from 5th of September to 11th of September. The reason is that my birthday comes on 6th of September and we have planned a trip. So from 5th to 11th, I am not in my hometown, so I won't be able to take classes. So I probably, once we finish this chapter, the next chapter will be after a week's time, like will be around 12th or 13th of September. So that will take a little bit of time. Thank you, Aishwarya. Thank you. Alright, guys. So with this, thank you so much for being a part of this. Please, guys, please make sure that you need to get one friend attached, right? Not more. Just get one friend attached. Just inform that one very, very good friend of yours that, hey, let's start doing FM together, right? Let's ask them get one friend. That's it. Nothing more from you. I want get one friend attached. Okay. Thank you so much, guys, for joining in today's session. I will see you tomorrow evening at 6:30. Kudos.